Yo, what's up, premium chasers? Today's video, you're in for a treat. I'm going to show you my favorite wheel strategy stock research method, especially if you want to get into the wheel strategy and selling options. I've been using this method successfully now for like 7 years, and I think you're going to absolutely love it. These are really stable companies that offer fantastic dividends as well. So without further ado, let's go over the shoulder so I can show you it. All right, guys, and don't forget, one lucky commenter down below will win a free option strategy call with me one-on-one personally. But guys, again, I gotta do it. I gotta give a quick shout out to our awesome community. Guys, it's free, right? The Facebook group is down below. I post my trading ideas, right? We had Wawa here hit his first time ever collecting premium. It looks like he did some AAL cash secured puts, collected just about $61. We all remember our first. I think we do. I post some of my trade ideas and stuff that I'm working on every single morning. So if you want to be part of it, make sure to head down below right now. It's free, and request to join the group. But guys, today, I think this is going to be one of the more valuable videos I give you, because it's not me going to be just telling you the stocks to actually wheel, right? And not that I'm ever telling you what to wheel, but I think, you know, we see a lot of these videos and I love shooting them. I love showing the research I do on wheel strategy stocks and sharing them with you. But I want to show you guys kind of like how to find them on your own, right? Like, cause like that's the great thing about investing, and like especially like selling options and doing the wheel strategy, is like we all got our own strategies, right? And just there's no like one size fits all, right? Like there might be a play you're looking at that I would never even think of, and like this is kind of like, I think, foundational, that I think is going to help you out so much with researching wheel stocks. And this is like exactly, especially when I was getting started, this is like the basis of the quad option strategy, which, you know, if you quickly do not know what the quad option strategy is, what we basically are doing here is we're collecting 4 sources of income with our with selling options. We're collecting cash secured puts, we're collecting covered call premiums, we're collecting dividends, and then we're collecting that appreciation sale. We stick to our plans here, okay? We don't care about fictitious gains. Our goal is to lock in real gains and be happy about it, okay? So what are we going to talk about first, right? So my recommendation, if you're just getting into this, is go into dividend kings and dividend aristocrats, okay? If you don't know what a dividend king is, I'm glad I'm the first one to tell you about it. It's basically somebody, or a company that has increased or paid its dividend out for 50 plus years, and a dividend aristocrat is one that has done it for 25 years. So that's awesome, right? Like, come on now. Like, these are going to be usually boring companies, which I get it. Listen, I know what videos pop off on this channel already. Like, I've only been doing this for a month, but I already know when I talk about NVIDIA, I'm talking about AMD, I'm already talking about Palantir. I see the views I already get on those videos, which is fantastic, but there's one thing that I refuse to be, right? And I really hope that's why you guys like to be subscribed here, enjoy the community, is like, I'm not a hype man, all right? I'm a realist, right? I'm a realist, all right? And I know that those hype stocks, they're fun as hell. There's some great premiums to be had, and fun, very funnest options. I do it as well. But at the end of the day, for me, like if I was sitting next to you, I'm sitting next to my mother, right? Like, and I'm teaching her a strategy, I wouldn't say necessarily to go sell options on that. I would be saying to do it on these kind of companies. They're boring, but they work, and they build your wealth over time, right? And you're putting the odds in your favor, right? So like, here's the dividend kings list. It's just on Motley Fool. If you go pick up this list, if somebody remembers in the comments, you could like paste this link in there. Hopefully I remember here. Now, these aren't fun companies. Like, I'm telling you, like, they're not. Like for example, like one of my favorites is Procter & Gamble, right? Like, let's just go take a look at the chart for PG, ticker symbol PG, Procter & Gamble. Like, if you ain't, like, it's Procter & Gamble, bro. Like, come on, this is a fantastic company, has a decent dividend. It's not an out of this world dividend, but it's something. This is what you have to understand. Like, something is better than nothing, okay? Now, yes, the premiums aren't going to be as juicy. They're not going to be incredible like that, but it's still a safer play than going after something else. None of us are going to complain about sitting on Procter & Gamble stock. I'm sorry. Like, we're just not. So let's just quickly take a look, right? We'll quickly do some analysis, and I'll kind of walk you through, guys. I'm going to assume you're fairly a beginner at selling options. So I'm going to show you guys how to kind of like find these great selling options and wheel strategy stocks. And then also, you know, do some basic analysis on how I do things. So first things first, obviously we pick a company. So here I just tossed on PG, Procter & Gamble. And then what I like to do is head over to the actual chart page. For some reason, what is going on with my Yahoo Finance right now? Okay, there we go. So, all right. actually good example. Maybe. So right here, I have 2 indicators that I added, 3 technically. So here's what I like to do, and what I want you to kind of get used to. I want you to go here and add indicators, and I want you to add in the RSI and the Bollinger Bands. Okay, for the Bollinger Bands, right here where it says the period, put 30. This is basically going to say what the middle of the Bollinger Band price is. Okay, so right here, our middle and what the stock is trading at is basically right at the same time, right? So that is saying, hey, the past the 30-day moving average at 30 for the stock is around $164, right? That's the middle of the Bollinger Band. The top of the Bollinger Band, you see we're at 172.30. Bottom of the Bollinger Band, 157. Pretty big gap, right? So we're seeing some pretty decent movement here on Procter and Gamble. So how do we use something like a Bollinger Band to decide our entry and exit points? So the way I like to do it, there's 3 things I do. Okay, if I'm trending towards the top of the Bollinger Band, that usually means that the stock, right, is being a bit overbought, right? There must be some news, great earnings report came out, something came out that a lot of people are getting into the stock. And when a lot of people are getting into a stock, it sends the price up, right? So I like to sell my covered calls, which we'll get into in a minute, when I'm towards the top of this Bollinger Band. When I'm moving towards the bottom of the Bollinger Band, this is when I like to sell my puts, cash secured puts, right? Why do I do that? Well, that means there must have been some bad earnings or bad news came out, and a lot of people are trying to get out of the stock. They're trying to get it out of here, right? They're selling off, right? And that's usually a great opportunity to get in on a company at great prices. Now, if I'm in the middle, I usually don't do anything, but I have. So what I will usually do if I really just, let's say I just genuinely want to get into Procter & Gamble, right? Like what you can actually do here is you could just buy 100 shares right now at $164, right? And then sell your covered call against it, right? Like, and I've done it, and it's a strategy. There is a strategy to it, but usually this is a decent sign. Like for example, here, like let's say you miss this bottom, right? Let's say you miss this bottom, which would have been around 158, right? You missed this bottom, but you really want to get into you really want to buy it, right? Like you genuinely want to buy Procter and Gamble and then run your covered calls and collect those dividends on it, right? But you missed it, right? And then like you kind of missed it, and then like you still want to get into it, and like maybe you came back around here, and you usually see this upward trend off that bottom of the Bollinger Band, and it doesn't necessarily make too much sense to do cash secured puts on an upward trend because your premiums aren't good. So the best thing you usually can do in a situation like this is to just buy the 100 shares right in the middle of the Bollinger Band and then just sell your covered calls against it and collect premium. More advanced, is it something I necessarily tell you to do right now? Probably not. Stick to what I'm telling you. Stick to kind of what I'm going to show you right now. So let's try to find one of these. And I have there's 2 lists, guys, of these that I like. So we have Dividend Aristocrats or Dividend Kings and then Dividend Aristocrats, which is right here. And again, these are all going to be companies that have done it for at least 25 years, okay? So let's actually take a look at Pepsi. Pepsi is one of my favorite companies to do this strategy on. Let's see if there's any movement. That's the problem with these companies, guys, is oftentimes they don't really have that much movement. So when they do, get in, right? Because it's usually a great opportunity. Okay, perfect. So, Pepsi's been kind of getting just beat up lately. I mean, we had some great plays that I called out earlier about this. I think we called it like right around here, where it was it's just a great stock. Like, dude, come on, it's Pepsi, guys. Like, I'm not gonna get into all this, but like, it's Pepsi. The amount of brands and stuff they own, I love this company. What's their dividend here? Just almost 4%, which is fantastic. So let's take a look here. We're looking at the chart here. I'm just gonna zoom in a little bit, so we can see that Pepsi is kind of just hanging out in that middle area, of the middle Bollinger Band and the bottom one. So this is usually a decent sign for us to open up cash secured puts on it, right? Because we're kind of going down. Now, it is also a red day for Pepsi, which is a good thing. If it's a red day, that usually means it's a great time to sell cash secured puts. If it's a green day, that usually means it's time. Now, I'm saying that like as a high level overarching thing. There's more that you need to look at before you just, it's a green day, I'm going to sell covered calls. It's not. Like, you want to do your technical analysis, look at some of the other things that we talk about on this channel. So go ahead, dive into all that content. And I do have a beginners playlist down below in the description of today's video. It's completely for free here on YouTube. I kind of compiled all of the like beginner stuff and put it into a playlist to help you out and get you started, okay? So let's go over to our Robinhood app, and I'm just going to type in Pepsi right here, okay? Not Pepe, the cryptocurrency. All right, and then we're going to go over to Trade Pep Options. Now here is what we call the options chain. So before we dive into this is how I start my mornings, okay? What I do is I go to my watch list. I look at what's popping off and what's dumping. After that, I find 3 or 4 opportunities that I then do a little bit of technical analysis on. Once I do some basic technical analysis on, then I then move on to the options chain, right? And that's usually what I'm posting inside of our group here as well. Like why am I thinking about these sorts of things? Now, I do plan to have a more organized group here in the future. So stay tuned for that, because I feel like, guys, like, I love this community so much. Like, it's seriously so cool. Like, I actually, like, cannot wait to wake up in the morning to, like, see all of your questions. Yeah, but it's starting to get, believe it or not, like, it's getting out of hand. Like, and we're still so small, right? And, like, but it's, like, eating away at my day. So and then some of you, like, hit me up and you're like, dude, I don't use Facebook, or I don't use this or that. And I'm like, okay, like, you know, like, but I want you in the community. So, Wolf, I'm gonna figure out how to do a better, like, organized community, because I really want to do something cool here, guys. Like, I would like, in my mind's going, like, I want to do, like, meetups and stuff. Like, I don't know, like, I just feel like I want to hang out with cool people that like to talk about this all day long. Like, that's what I want. Like, and I'm sure that's probably what you want if you're watching this video. So, let's get back over it. So that's kind of like where I start, right? At that point, I then wait for market open to then actually see what happens, okay? And this is important, right? So here we are on the options chain. Now, again, we stay away from buy. We are not silly options buyers, okay? Those are silly people, and they write our paychecks, okay? We are options sellers, right? We sell options, collect previews, and repeat. So now we are now selling a put, meaning we are, right, it's a red day. This is the time to now decide what price we want to purchase 100 shares of Pepsi at. So we click sell, put, and then we're going to select our expiration date. Now, there are strategies to do companies like Dividend Kings and stuff on a weekly basis, if you wanted to, or like 2 weeks out. We're not going to talk about that today. I sometimes will do like shorter ranges on like a Pepsi or something, but for the most of you, I would say stick between 30 to 45 days out, okay? So we're just going to pick 38 days right here. So now from here, this is where we're going to select the strike price that we would actually want to own Pepsi. Now, it goes without saying, guys, you want to get a good deal on a stock, right? Like, especially if it's a stock you believe in, you love Pepsi, you enjoy Pepsi, like, this probably means you want to get into Pepsi at a good price that you're willing to pay for, right? Now, you could see there's obviously a clear resistance here around like that 135, because our premium is like $92, right? But then it jumps to 220 at 140, right? So this is information I would then go and take a look at and be like, okay, well, let's see, right? Like, okay, has Pepsi, like, when is the last time Pepsi, right? Man, my Yahoo Finance is being really slow, guys. I'm sorry. It is. All right. So has it even hit 140? Like, no. Like in the last year, no. Let's see, last 5 years, has it? Hopefully, maybe. But that's kind of what I don't know why my Yahoo Finance is being really slow there, but that's what I'm looking at. And then what I'll also do is I will add my moving average indicator, and I will set this to 200. And that's going to give me my average for the past 200 days of Pepsi. So right here, it's saying, look at that, 167. See, this is a great setup. This is a great setup, guys, right? Because like I want to, right, if I can buy under the 200-day moving average, as long as like the fundamentals for the most part stayed the same with Pepsi, it's still a company I love. Like, as long as I'm below that that 200-day moving average, I'm happy. So in this situation, I would consider doing the 140s. Right, 140s, right? If you're really kind of like risk averse to it, right? Let's just say 135s, right? So we'll open this up. And we can see our delta is only a 0.17. Basically, this means, and everybody looks at it this way. There's like the technical definitions where the price of the share moves up $1, whatever. It doesn't matter. The easiest way to kind of use it as a beginner is like the chance that you're going to get assigned, right? So in this case, there's an 18% chance that you're going to get assigned and have to actually buy your share. So you have to weigh your decisions in this game, guys, because if you really want to buy Pepsi and then run your covered calls on it and collect dividends, which is what you want, you might want to consider doing something a little bit more aggressive, which still a 0.33 or a 34 delta is still like pretty low. It's only a 34% chance that this is going to happen. You're going to get assigned. So like me, if this was me, I'm going to be like, okay, I'm just going to go 225, right? So when I do that, I like to go to my calculator to see what I'm actually going to be getting. All these calculators are inside the Facebook group. If you don't see them, tag me. And then I'm just going to click the view a little bit so I can zoom in here a little bit for everybody. So I'm collecting, right, $225, right? Now it just changed to 205, right? Whatever. We'll just use 205. 205. All right, we'll put that in as our premium that we're collecting today as cash up front, right? And then our strike price is 140, so 140 times 100, right? So you would need $14,000, right, to be able to do this trade, right? But that's, a 1.46% return in a single month on a damn solid company. In my opinion, I like that. Now, I like to put this expiration here. I have it as 7 here because it was something else I was doing. But I'm going to just put my expiration date as 38 days to see what my annual return is going to be, which is 14%, right? That's a 14% annual return. Not bad, right? Again, safer company. So at this point, I might go and look at some other stuff, right? I'm like, okay, well, you know what? Maybe I would, if I saw it was at 225, maybe I'll just start at 225 because that's gonna, or try to get filled at 225 because that would have really made the numbers a little bit better, right? 1.61% return in a single month, and getting in at a price that I want. What I might then do is I might go look at the 31 days, right, and see, hey, what am I actually getting here, right? What can I actually get here? So let's look at the 1.4. So it's a little less, right, but it's less time, right? So it's 197. All right, so it's actually a really good example. Watch. So still about that 33%. Right there, a chance of being filled. I'm collecting $197 of premium. Right, $197 of premium. Still collateral is 14%, but now my expiration is 31. Look at that. So this is what I mean. Like you'll start getting this. You'll build this muscle, right? I do recommend everybody. You kind of have to do this for a year to like learn your strategy. This is how I do it. So like I would look at that 30 to 45 days, which you would think be like, yo, it's 45 days out. My return's going to be better. Nah, it ain't. Look, my annual return is 16.5%. Now, of course, you're not going to run this trade 11 times a year, right? But my collateral is going to be freed up, or I'm going to get into that stock faster and start getting the covered calls going faster. You see what I'm saying? So like you have to do those things, right? In a little bit of a research and like think why you're doing something. They'll just like do it because somebody on the internet told you to do it. Be like, okay, which one's going to make me, which one's going to put my money to work more, right? And in this case, right, this is the better play, right? Because again, annualized, your return on the month is basically the same, or like basically like $10, right? A little less premium. We're collecting $10 less from the 205 less, right? So again, you just got to do these little things, right? And you'll see over time. And again, you do this for like a year. I always recommend people commit to learning selling options. It takes about a year. Some will say less, but it depends on like how much time you actually commit to this. Like you'll be a beast and you'll like quickly, this will all be like second nature to you. You're not going to sit here for 30 minutes doing this, right? Obviously you're just like learning, I'm assuming in it right now. So it feels overwhelming. It feels scary, but you'll get better, right? And it's just like, what's his name posted today? Man, we got so many people joining the group, which is awesome too. It's like, dude, your first one is always going to be the scariest. I don't know why my thing doesn't sort. But like your first one is always going to be serious. And you see, he said first time always makes the heart pounding. Yeah, it is. Dude, your first time collecting premium is going to be the hardest. Like the first time you're going to do it, and it's going to be scary, but like I promise, once you're doing it, you're going to be opening multiple contracts, you're going to be doing it on multiple companies, and like it's just going to become like, okay, another day in the office. And that's when you start moving from that beginner to intermediate to an expert, which I think for us most, if you're a beginner, again, putting in a couple hours a week into your education and stuff is gonna help you a lot. And then over time, like once you're in that intermediate expert, right, you start developing your own cool strategies. Just like for me, I developed my own strategy, right? My quad option strategy. which is, again, cash secured puts, covered calls, dividends, appreciation. So again, take a look at some of these other ones. I think these are all going to be great. Like J&J, you guys already know. I mentioned Coca-Cola before. J&J is fantastic. I've mentioned Hormel Foods before as well. So kind of look through these. Maybe there's some of these that Cisco I've met, not the actual networking company, but the Cisco with an S. SY, AbbVie. So there's so many Target, like there's so many great companies in here that you probably never even heard of because everybody only is talking about like Nvidia, AMD, Palantir, SoFi. Like, and again, like, dude, there's so much hype in those. Like, I'd rather you start your option selling journey like the right way and not get burned, right? Because you could get burned. You could get burned if you start selling puts on Palantir right now. You could be stuck holding that for a very long time, right? I rather you be like a safe, smart investor. Like, so I like to look at us as like smart investors who make calculated risk, and then also take a look at the dividend aristocrats list, and you know, maybe there's some like a McDonald's is another one I love doing it on. Like, come on, who doesn't love McDonald's? Stop, like, bro. Even RFK was eating McDonald's with Trump on the airplane with Elon, right? And that other guy that nobody knows who it was, right? But like, I'm just saying, like, you got to do your own. You know, these are a great starting point because at the end of the day, all BS aside, even if you get stuck holding these, which does happen when you're running cash secured puts and covered calls, you're collecting a dividend and then you're running the covered calls and collecting premium. You're making two sources of income, and then when you sell it, you're making that appreciation. Guys, I hope you enjoyed today's video. Don't forget, drop a comment down below for your chance to win a free option strategy call. And also, don't forget, sell options, collect premiums, repeat. I will see you guys tomorrow.